Good sunny day, everyone. Well, the jobs report came in mixed reception. We have the payrolls coming in a bit light, but the wage growth was at its highest since 2008. So that's a pretty material change. And in addition to that, companies were reported to be complaining about a shortage of skilled labor. So that implies that the Fed has more room to hike rates this year. They've indicated 3 more rate hikes, and the market's taking that in stride because so far there's indication that, according to their reports anyway, that the economy is on the mend. Of course, it's a matter of good debate to always be aware that a lot of these figures that they report, the unemployment rate, etc., are distorted figures. But nevertheless, markets they're built on perception. A lot of these bubbles that have occurred over time is all about perception, whether there's truth behind the bubble as it's expanding. We all know about crazy bubbles that have occurred where there was no truth behind the bubble. So at some point they did burst. And nevertheless, perception continues to guide the markets higher right now. So that's what's important. That's how we make money, is by getting on board the right stocks and timing out the right moves in terms of the VIX volatility model and whatnot. We see that our focus list has also expanded to 17 names now. So that's a sign that market internals continue to shape up. But keep in mind, and this has been the truth so far over the last few years, whenever the market has even a 1 or 2 day pullback, that the leading names, the ones that are up the most, often get hit the hardest. And we know names like Acacia, ACIA, and Twilio, TWLO, many names like that get stung pretty hard when off their strength once the market starts to soften. We see that gold has been bouncing, but it's still in a downtrend. It's bounced before, and trying to figure out why these bounces occur can be challenging, to say the least. There's more cross currents that exist with gold than probably many other instruments. You've got on the one side, you've got manipulations by the Chinese government. And there's certainly a major force out there in terms of having the capital to manipulate the price. We have ongoing concerns about the QE bubble, concerns about lagging global economic growth, whether the interest rate cycle will continue to tighten, because we are now 2 tightenings and potentially 3 more this year. The yield curve has steepened appreciably as a result, indicating that that's an indication that there's stronger economic times ahead. The U.S. dollar has been strong consequentially, and that has put gold in its current downtrend. So, in terms of this downtrend being over, there's still no real sign of it. This could just be one of gold's bounces in the downtrend on its way lower. But don't try to overthink the whys of gold, because it's very difficult, if not impossible at times, and only in hindsight would someone see the reason why gold did what it did. It's far more profitable to, as we always say, just watch your stocks, watch price volume action, look for the opportunities, keep your stops tight, and sell when the price gets ahead of itself. And that system has worked very well over the last couple years. And over in China, there was a report a couple days ago that their economic growth seems to be picking up. I think it's the strongest report since, or the strongest sign of that one metric since 2013. And that's quite a difference from last January, when China's economy was showing signs of trouble. And we all remember in January that the first 10 days of the year were the worst days in market history for the first 10 days of any given year. Therefore, China is obviously a very material player in the markets. It certainly can have a dramatic effect on the U.S. stock market, and so in a way, it's good that they're showing strength. And so far, the Dow has yet to hit that elusive 20,000 mark. It keeps teasing everyone. Now for what, almost a month. It's been trading very close to the 20,000 mark. So it's probably going to break through probably sooner than later, and then it'll be interesting to see how the markets react, because we talked about back in March of 1999 when it finally broke through 10,000 by more than just a point, and then it had an immediate about face, and then sold off 4.6% over I think the next couple days before finding its footing, and then it finally, in earnest, went to new highs and went all the way up something like 10% in the next couple months. So it could be a good swing trading opportunity, and we'll have to see what unfolds. But in the meantime, Gil and I are going to talk about, I guess, some of the many names that have gone on the list so far, and other possibilities.
Well, I think there's some interesting action going on right now. You can see the S&P is already breaking out, I think, to new highs. Would that be a new high, or let's see? Well, and that would be a new closing high, I guess. The Dow, I think the Dow is going to hit 20,000 today. That's my prediction. The reason it's going to hit it is because this morning my Dow 20,000 engraved martini glasses finally arrived. So, as we all know, timing is everything in the market, and so I'm assuming that should coincide pretty well. We'll see how that goes, but in any case, I think today it could happen. So we'll see. We're only how many points away, Dr. We're 41 points away. They could, let's see, you got stocks like, I think the metals have been doing well. We've got a few of those on the list. So you see X here, it had a nice pocket pivot. We put that on. You got the pullback into the 10-day right here. I think you buy it and use a 10-day as a stop or a selling guide. And then what I'm looking for, X is a component of the Dow, so I'd look for this to turn around later today and help drive the Dow higher. So we also have Steel Dynamics, and you're seeing these stuff stocks sort of come to life. Notice one thing about these, and this is this ugly duckling principle coming into play, because what happened last week, let's just go back to X real quick. You can blow it up nice and big, but you can see that you're selling off on heavier volume. Let's see, I need a nice pen color here. I prefer black. Is black a color? No, it's not. But you can see here you're breaking down and you're undercutting these lows, okay? But the volume's picking up, so it looks like it wants to head for the 50-day line. But all it does is undercut, and so it's looking ugly. Volume's picking up, selling volume's picking up. You got 3 down days. You got an outside reversal off the peak here. Not looking so good. But all that does is turn into an undercut and rally, or a Wyckoff spring. And we turn back to the upside, and you post a pocket pivot on Wednesday. Now you're backing down into the 10-day line. And what's the volume rate on this right now, Dr. K? Running high or low?
On X minus 16%.
Yeah, so it's drying up. So to me, it's probably going to, you buy it here, it's probably going to hold up and turn. Now the other thing here is that earnings are expected for X on, I think, the 23rd. So that's, you're looking for, maybe it breaks out ahead of time and you get a nice 10-15% cushion, and you can maybe sit through it. I don't know. I tend to think that these are trading on forward earnings for the most part, although I think the STLD shows some pretty strong numbers. X is not too bad, but I think the estimates are stronger. So some people are asking, oh, why are you putting these names on, because they don't fit Can Slim? But for those of you who are new around here, one of the things I think you have to recognize if you're watching what actually happens in the market is that frequently leading stocks become leaders before it becomes obvious to everybody in terms of their fundamentals. So the old Can Slim idea of 5 quarters of earnings up 25% or greater is basically looking in the rearview mirror. And back in the day when you were the only person using daily graphs and you had access to all that data, you could that might be something nobody knew, or very few people knew. Now everybody knows what the backward-looking data is, and I think a lot of these stocks trade on the basis of forward estimates. And I do believe that institutions definitely look at things that way. They don't look backwards. And how do I know that? Well, I was the head of institutional services at William O'Neill Institutional Advisory for many years, and 8 years I think it was, and I got to understand the institutional mind. And towards 2000, after 2000, they were bugging us for data, or at least a line on the charts that showed the forward estimates. So they could actually see the earnings line on the charts for the estimates going out 2-3 years. And then they would be able to gauge the market PE relative to where the estimate line was and operate on that basis. But you could see that the institutions are already taking a forward-looking view, and I think that's the case with a lot of stocks that have been big leaders. I mean, look at Tesla back in, when did that thing have its move, Dr. K? Like 2013? And it was losing money, right? It had a huge price move.
Right.
Right? Okay. And then look at Amazon. You know, that's another one. So you have to break out of that old can slim paradigm. It's like, yeah, you're going to have stocks. There's going to be the occasional NVIDIA and whatnot, and yeah, they'll work, but you're going to be dealing with a smaller group of names in terms of a thematic drivers, and that, to me, that's really the key here. So if we think the Trump economy is going to be strong with tax cuts, corporate taxes, which I think are very fundamental tailwind for business in general. So I think that could drive something down the line, and you're seeing it initially in some of these, say, steel stocks, the metal stocks, the material stocks, some of the defense stocks have been trying to recover. But in other words, you've got all these stocks that had moves initially on the basis of the election results and the idea that Trump was going to help foster a better economic and business environment. So you had those moves, and that's what you see here in a name like STLD. And now it's had some time to base, and you undercut the lows here. Again, this looks a little bit ugly 5 days ago on the chart, but as it's undercutting this low, but all that does is set up the undercut and rally move. And what I'm doing on Tuesday is buying this thing on the undercut and rally move back above this low, which is 35.68. So as soon as I see that happen and it closes above there, I'm buying the stock and on the undercut and rally rule, and just using that as my stop. The prior low at 35.68 is my stop. I don't use shakeout-plus-three or shakeout-plus-two or whatever. I just use a move back up through the prior low. It's very simple. It's very neat. And statistically, it works better in terms of risk management than using a silly shakeout-plus-X, whatever that is. It's too arbitrary. And in my view, typical of some of the stuff they do over there at my old place of employment in terms of being imprecise. And I think a Wyckoff spring is what this is, and you play it on the basis of the undercut and rally using the undercut low, the prior undercut low here as your stop. So let's look at another name in the group that we put on, FCX. Another situation, notice how it undercuts this low here, turns and rallies. So boom, there we go. So this actually gapped up and ran up after the election, and if you notice, it was actually percolating ahead of the election. In fact, do I see a pocket pivot right here, Dr. K, on this one?
FCX.
Right here. That would have been on, what day is this? Right here?
That would be, it's
is that clear enough?
One day.
Well, this day, and then you got this day, and then you got the gap up, and that's a Bible gap up, I guess, right?
I'm just looking at that pocket pivot. That is that would be a Bible gap up back there. Yes.
Yeah, but was this a pocket pivot?
No, missed by 1 day.
Yeah, so but
5 day.
It's pretty close, I think.
On the 3rd of January, when it was right at the 50-day, it had a 5-day pocket pivot, and that only applies if the volume gets really quiet, and it did. It was very, very quiet for 7 days. Granted, that's holiday volume, so you're going to have to take that into account as well. But you know, that was a low-risk buy point right at the 50-day there on the 3rd.
Yeah, so that's where you can be buying those. And then you get the pocket pivot on Wednesday. We put a report out on that. And I guess as it comes into the 20-day, that would be your chance to buy it. But you can see all of these metals names are moving. I like the steels on the undercut and rally and the pocket pivots in X and STLD. But you can look at AKS as another one that we put on or put out as a pocket pivot. Where am I here? Let's see. AKS. So, but yeah, so this is a cousin stock move, and because this is a rotational market where you see money rotate into one group and then furiously come out and rotate into another group, you get these group movements where all of the cousin stocks are moving together. So all the steels and the metals are moving as well. I like Rio myself. We put on FCX, but you can kind of, you know, it's half of 6 of one and half a dozen of the other, basically. This one looks okay. Southern Copper, which is one, two, let's see. That did not, well, it cleared a pocket pivot volume signature yesterday, but the day before it missed by 1 day. What's the difference in 1 day? Does that make all the difference, Dr. K? I would think you get 2 5-day pocket pivots in here. I can see that, so that might be helpful.
Well,
But
again, that holiday volume, which means the volume obviously is going to be less than normal. But that, technically speaking, the buy point, it's also a function of where it's occurring. And on the 3rd, that was a pretty low risk place to go ahead and take a position on a 5-day. So you could have done it,
it
before.
does undercut this low here, this low on November 29th. So, a lot of these were showing this undercut and rally stuff before the pocket pivots occurred on Wednesday. So sometimes you can act on that basis if you're watching these very carefully. But it's, it's not like just buying a breakout, because any idiot can see a breakout and just buy it. It's also a good way to lose money these days. But I think getting an edge using this sort of setup and looking for it and being open to it when it happens. I can be bearish on something, and as soon as I figure out that the objective evidence shows that you don't want to be bearish anymore, you want to be bullish, I'm happy to shift. A good example of this would be Amazon, which we have talked about. Let's go to the weekly chart here, because you can see it here. It has some characteristics of a head and shoulders, but notice how this right shoulder, and you can go into the look at the book Short Selling with the O'Neill Disciples. I actually show several textbook head and shoulders patterns that don't work. In other words, they lead to upside and the stocks break out to new highs. So just because something fits a pattern doesn't mean it's going to work like the pattern supposedly will work. It will only work if you're in a bear market. It's like, a similar situation is where I get these emails or tweets, people asking me if something is a pod. Well, something can be a punch bowl, but it's not a pod, a punch bowl of death, until it actually dies. So you need to see, a breakdown. So, for example, BABA can be seen as a punch bowl at this point, but once it breaks down here, it becomes a short, and it's now a punch bowl of death. So until you see it break down, it's not a punch bowl of death. It's just a punch bowl. So same thing.
I always, when I get inboxes or whatever,
25 points away.
Yep, 25.
We deliberately timed our
broadcast. If it's up 100, it coincides with the Dow being up 20,000. And
what?
It looks like the Nasdaq futures have been really strong all morning. If they continue this rate, I think we'll have 20,000 by the end of the broadcast.
I think we're going to get there. I told you, my martini glasses came in. It's got to happen. It's got to. I mean,
martini
that case of vodka I just bought and it came in. I was like, who's going to drink it? Anyways, but getting back to this idea of labels are labels, and I don't rely on macro labels. I rely on the precise price volume action, and I'm open to whatever happens. And last week, you guys might recall I was talking about Mobileye and how I was looking at that as a possible short here as it was coming up. But when we put out the URL, the web address for the webinar video that's recorded every time we do these webinars, we noted in a paragraph there that I actually shifted my view on the stock and went long. And the reason is this is a big bottom fishing pocket pivot 6 days ago. You guys can see it. And I realized that instead of it being a high volume reversal right around the 50-day moving average, that this thing was going to turn into a bottom fishing pocket pivot. Not only that, you're undercutting a low here, and it's becoming an undercut and rally type move through these lows. So even if just to test it, if I didn't want to use the 50-day line as my stop, which normally I would, you could also use this low here, which is somewhere in the 36, right around 36 or so. In any case, that thing just launched higher. Now it's hanging along the 200-day line. Volume is drying up, and this thing has had one pocket pivot, 2 pocket pivots, a third pocket pivot, the last 2 off of the 200-day line, the first one coming up through the 50-day moving average, and it's also an undercut and rally move. And you don't need to sit around waiting for it to go shakeout-plus-three. You can just buy it on the basis of a couple of factors here that are objective, which are that number one, you have a pocket pivot here, and number two, you have an undercut and rally move. So you know, in that case, you can control risk relatively tightly by using the 50-day line as your stop, and the thing's gone higher. So that was a nice trade, you know, for 3-4 days, and now it's coming in, and this thing may try and turn around. You also, I think, just undercut this low here. Let me pull up my data window here so I can see what the heck is going on here. Here we go. So if we're under this low here is what, 33.93, and you got to 33.69. So you undercut this low here, and notice how that looks like a head and shoulders, so it's sort of a fractal head and shoulders, but it ain't working. And the main reason it's not working is because the market's not going into a bear market. So remember, short selling patterns will work best in a bear market. Things start to work out on the long side, and you start to see the undercut and rallies. You start to see the bottom fishing pocket pivots, and even bottom fishing sort of buyable gap ups like we're seeing this morning in GKOS, for example. The volume projection there is pretty good, right? You probably get to 1 million shares if it stays on track, but we'll see. Where are we at now? Let me know when we hit 20,000, Dr. K.
Yeah, my alert will go off. I'm sure everyone's will.
It's just a number, though. And then what's going to happen? We're going to sell off at that point? Oh, no. The pundits are all telling us we're going to sell off after the inauguration. Okay.
I'm dying to see what happens, because I've studied the intraday moves back in March, and also the intraday moves when the Dow hit 1,000 for the first time. Mm-hmm. So there's some historical precedent that there's a lot of manipulators out there that want to have some effect, and we'll see if it plays out the same way once again, because I think it'd be a great swing trading opportunity.
Could be. Okay, where are we? Where were we, rather? Trying to run through some of these names here. Whoops, look out. There's the list. I knew I had it here somewhere. I guess I can't make it. I can't move it. What's going on here?
I was just going to say, when I get some questions or comments from people from time to time, and the general challenge, I think, for investors is to train their chart eye, like we talk about in our books, so that they can evaluate the shape of a stock chart, not to label that shape, because that can be very dangerous, but to take that shape in context with the general markets and the industry group it's in. And that takes a lot of work and practice, to develop that kind of fine-tuning when you're looking at these charts. And then the next challenge from there is to be able to, let's say you identify a proper pattern, in a contextual level. That pattern can morph into a different pattern, in the days ahead, and to be able to remain fluid in your viewpoint, so that like whatever identification you made has now changed into a new type of pattern, and to be able to trade with that new observation. That takes years and years of work and training to get to that point where it becomes more second nature. Because that's the thing. I think that's the biggest thing that trips people up, is the context of this chart against a general market. It's all too easy for the eye to see things that are not there if the chart pattern of the stock is not contextual to what the general market's doing. And we've talked about this for years. Like a very famous example was Schwab, I think back in 1999, and it had a very V-shaped base. It looked defective, but in context with the general market, it was actually not at all a V-shaped base. Well, let's just say it was a V-shaped base, but it was not defective, and it could have been bought on the breakout back then. So I would always advise people, just to keep studying these charts in proper context, and after 1 million charts or so, it'll start to sink in.
Anyways, you got Glaukos moving. Myovant becomes viable at the 10-day line. I think he had this big move, 14% move last week, which I thought was something you take profits into, and it's actually held pretty tight, but then you get a chance to buy it back at the 10-day and the 20-day. This stock trades, what, 100, does it even show? What is this thing? This is like a couple, 300,000 shares a day. It's pretty minimal, so it's fairly thin, so that makes it difficult. Some other ones, people have been talking about Insight. The biotechs are starting to come to life, and you've seen that occur over the last 4 days. Pardon me?
Yeah.
What's that?
I think the market cap is it's a micro cap. It's not even a small cap. So
Right.
keep that in mind. And it's a biotech with. Do they even have sales? No, there's no sales or anything. It's.
Who's that? Myomat?
Devio development stage company.
Right.
So keep all that in mind. It's offered two excellent entry points, which we've discussed. Where once it was up almost 20%, and then again about 15%. So. It can get, out of this if it's getting quiet in here, and I think that people should be aware that it could do another one of these stabs toward 14 if the current pattern continues to remain very quiet, that volume dry-up action we like to see.
Yeah, just don't be dumb and chase strength in this thing because it's not going to pay off. But there are other names in the group coming to life. You've seen this Insight is trying to come up. I think you had a pocket pivot in here. It did, yes, 3 days ago. So you have a little pocket pivot. It's right up to the top of the range, but also look at Celgene is trying to come back. You had Gilead posting a bottom fishing pocket pivot. So all of these things are still kind of down in the dumps, but they're showing some signs of life. So if I see that, then I'm more interested in looking at the stronger acting names in the group. And I notice Eagle Pharmaceutical, well, that's not acting so well today, but it's coming back into the 50-day. It was acting pretty well, but this is pretty typical of the group. There's this one, Clovis, everybody's talking about. That one acts okay, but you got to buy it on weakness. So I guess they had a drug approved by the FDA, but it doesn't seem to be leading to huge gains there, mainly because the drug, I think, has a lot of competitors. Anyways, I'm going to go through some questions real quick. Somebody's asking about BBL. Billiton, well, that's another metals name. I think I like the steels better, the STLD and the X better than these. This is an Australian company, so you notice the chart's a little bit gappy there because it's trading in Australia. Rio's similar to that, and that one's kind of just hanging along there. I don't know. I think I prefer the patterns that look better to me are the steels. So X and STLD look better. And X would be the big leader. So AKS is interesting, but that's just a smaller $10 stock. So let's go through some of these other names. This AGX has been doing okay. It's hanging along the 20-day line. You didn't have a pocket pivot 3 days ago because there weren't. You had this higher volume here, but it's acting okay, and that's a material stock. Amazon had the pocket pivot, and we reported on that yesterday, and that's an example of a stock basically it's what it's doing now is building a new base. It looks like it's going to come up and clear, and it may head for new highs. Earnings come out, okay, we're 21 points away. Earnings come out at the end of the month, so it could move up and press for the highs before then. So I wouldn't necessarily worry about the 800 price level either. I don't think that that's necessarily relevant as a century mark since it's already come below it. Now, it is the bottom of this gap down, or I'm sorry, this gap down window here. So, but it's past the gap down day. So I don't know. That's kind of neither here nor there. I think if you just go with the pocket pivot you saw yesterday and you bought that, that's good enough. ANET, I'm actually long this one. I bought this pullback here. You have the stock going through the 100 price level for the first time, and so that becomes a century mark buy like NVIDIA was a couple of weeks ago or last week. Now notice you got these two big pods, but again you also have an IPO price range, this big massive IPO price range, and the stock has just barely cleared it. So you get this very strong move through the 100 price level. I think you buy it on the pullback here and use the 100 price level as your stop. So we're 19,984. It's coming. Everybody excited? Has anybody wet their pants yet? I'm just wondering. So this is kind of cool that we'll get to see this. on a webinar. See, when we planned it this way, didn't we, Dr. K? We talked about this extensively a couple of weeks ago and predicted that today would be the day that the...
Timing is everything, as they say.
Let's see. That's not what I wanted. I know I have a screen in here somewhere. Whoops. No. Bear with me. We're going to find it. Hopefully, there it is. Here we go. So we'll just have that waiting there so we can all look at it. You can see we're at 19,983. I'll go through some other names. I'm messing around. I actually bought this one this morning because I had a pocket pivot the other day. Viva Systems. I noticed the cloud names seem to be coming back to life. So you're seeing CRM, Salesforce, has had a bottom fishing type pocket pivot. Notice how it undercut this prior low here, and then it bounces back up and retests. There's no heavy selling, so it's a white coffee and retest. Then you get the pocket pivot. You could actually buy that. I know someone who did. And now it's hanging along the 50-day line, and that looks pretty good. So here we are. Let's see, 15 points away now. Oh, it's coming. Anyways, and I think you looking at some of these other names, they're trying to make some comebacks. Now it's trying to come back. Workday has been slammed, and that's just kind of rallying, but I'm not sure I'm going to buy that. I'd rather buy something like this in a better sort of roundabout position. So this is where I want to buy it. You also have an undercut and rally. You notice that? I'm sure you all saw that. And that occurs on undercut of this low here. So that low is going to be 41.31. You're trading 42.26. You know, 50-day line is at 41.58. So you know, it's basically those two levels could be your selling guides. And it looks like okay, we're a little over. This is the closest we've been, isn't it? We're like
Yes.
10 points now. So here it comes.
Wait a minute. No, we were. Wait. Yeah, this is the closest. And we just hit.
Somebody wet their pants, they're telling us. And anyways, I think
I don't know. This is going to be tricky because
here we go. 19,991. All right, I'm just going to put that right there, and we'll go through some charts while we're watching this. Now, yesterday, the Chinese stocks, the last couple of days, the Chinese stocks have been getting going, and you saw names like Momo throwing up a sort of a bottom fishing pocket pivot off the 20-day line. That looks good. But one thing I would point out here is that all of these stocks were moving on the basis of the Chinese renminbi or yuan rallying off of its lows, and that thing's been in deep doo-doo for a while, and he finally had a sharp move off the lows a couple of days ago, and now it's started to today it came back, and you can see all these names, the Chinese names are all coming back in. So you got Baidu getting tagged. It's actually now trying to hold up. That's not bad. That's constructive action. Momo is trying to hold up. And that was you had a bottom fishing type pocket pivot yesterday, I believe, off the 20-day line. I will look at pocket pivots off the 20-day line. You might also notice that you have an undercut and a rally through this low here, which is 1950, or this low here, which is 1993. So that puts the stock, in my view, in a viable position based on an undercut and rally move using those lows as a stop. So that's something you can do. Here we go, 4 points away, 3 points away. I feel like New Year's Eve. Here's the countdown. Anyways, somebody's asking, with UCR undercut and rallies, do you prefer that on heavy or lighter volume? I don't have to prefer either. It's just if you get the undercut and rally, you play it as it is. But, you know, you get a feel for things as they're turning and rallying. And a lot of times sometimes it might be something I'm trying to short, and then you get the move and you figure, oh, this is an undercut and rally, you just flip and go long. So I'm not looking for any particular volume. You know, you also have to use your judgment as well. Parsley Energy is one I like, and I actually bought this one this morning, and I did this after trying to short it or earlier in the week, thinking it was going to break the 50-day, and it didn't. You could feel it push against you. So I just flipped cover and go long. And this stock actually, if I rank all of the oil stocks, I believe it ranks number 1, at least on HES Investor. They've got good earnings. They've got everything you're looking for. And then the base is basically tried to break out. You can see on the weekly chart up here, tried to break out. It's been in an uptrend for a while. So it is a leading oil stock. It's not something trying to bottom like... This one's actually coming back. Anyways, bang. Let's see. Yeah, these are still. All of these have been rallying. So with PE, there's similar. You'll see similar patterns, and a lot of these look to me like they might, like even FANG. Notice that you broke out, you failed, hanging along the moving averages, and now you're turning. So would it make sense for? Backing off now. Would it make sense for money to rotate back into the oils? So that's a possibility. And I think part of this market, or succeeding in this market, is being able to figure out where the money is going to rotate to next. So somebody's asking, is it possible to show a cluster of 5-day pocket pivots? Well, what do you mean? Can we show it? You mean an example of it? It's just be a pocket pivot with the volume higher than any down volume over the prior 5 days. So for example, this one, this volume day here, I'll just use this PE as an example. This one here, whoops, I'm losing mouse control. You can see this one, this day here occurred, this is the highest day. So did it exceed that? I don't think so. So 1, 2, 3, 4, 5. Now this one, and this one actually would not, but this one would, wouldn't it? No, actually you're getting 3 5-day pocket pivots here is what this looks like. So, and that's because this, I don't think the volume is higher than this day, so it's within 10 days, but it's not within 5 days. So that would qualify as a 5-day pocket pivot. So now that you're thoroughly confused, you get the idea. But it's pretty simple. I mean, if you understand a 10-day pocket pivot, use a little common sense, which would tell you, well, if the 10-day pocket pivot has to be the highest volume, well, not the highest volume, but volume that is higher than any down volume day over the prior 10 days, then a 5-day pocket pivot would have to have the higher volume than any down volume day over the prior 5 days. So, and you might see 2 or 3 of those show up. And within the context of, say, constructive price action or tight price action, a lot of times I'll go for those. So, and I believe though Viva Systems has a couple of 10-day pocket pivots here. The first one did not clear the 50-day, the second one did. So you get a little pullback and now you're turning. And let's see, what other names are on our magic list? JD. What time is it? 9:40. Okay. JD had a pocket pivot yesterday. It stalled, and it's holding along the 20-day line. It's still in a viable position. Netflix. This one we talked about, I believe, on Tuesday when it had a pocket pivot at the 10-day line, and it has moved higher. So, there's an example of not needing to see a breakout to be buyable. If you're buying the breakout, you're buying up here. But if you're buying the pocket pivot, you're getting a head start. Mosaic is hanging out. You got to buy this one on weakness. You had a big pocket pivot-like move 3 days ago, but it was a little extended from the 10-day. But that's acting pretty well. And it's a stuff stock coming back. They're all coming back. NVIDIA is still on our list, and we haven't taken it up because it hasn't broken the $100 price level yet, the century mark. And the pullback has taken it to the 20-day line, and volume is drawing up. So, tell you the truth, I would not be surprised to see this thing push back up to the highs just to squeeze all the eager shorts. Okay, are we closing in now, Dr. K? We're 5 points away.
5 points.
5 points. Whoop, let me get back to my quote screen here so everyone can see it. We're all going to witness history together. Maybe not. I don't know. What do they say? A watch pot never boils. All right, back to the charts. Let's see. Tesla's been acting okay. A couple weeks ago, someone had asking, I want to enter a short here. On what basis would you do it? Well, you'd look for a break of the 200-day moving average, but that never really happened. Not on heavy volume. And instead, what you've had on Tesla, and I've actually been long this stock. for the last few days, you had a bottom fishing pocket pivot here coming up to the 50-day line. Stock ran up, had another pocket pivot up here at the 200-day line. Then it had another pocket pivot off the 10-day line here. So if you think you're going to get short the stock and you see the pocket pivot, you've got to be out of there. And in a case like that, I might be flipping to the long side of the stock. Then you have this massive volume pocket pivot here. The stock pulls in normally yesterday, and it's about 20% up from here. So in my book, that's a swing trading move. I'll take profits and look for it to settle in. You know, maybe it pulls in a little bit and hangs tight, gives you another chance to buy it. But that's a nice move, and don't be surprised if this thing keeps going higher. A quarter of the float has been sold short, and unless the shorts get what they're looking for, which is some sort of bad news that means it's the end of the world for Tesla, they have to cover, and this becomes a big short squeeze. And then maybe some of the institutions that have owned this, like Fidelity Contra Fund, for example, who've owned it for a long time, they come in and decide to jam it. Just to burn your ass, as Larry, what was his name? Sir Larry in the movie Wall Street said to Gordon Gekko. I could dump the stock just to burn your ass. So the institutions all say, we can just jack the stock up to burn your ass. Anyways, to all the short sellers, who are all the smart people out there, because everybody knows that Tesla sucks and they're an overvalued car company. So, I mean, I knew that. So, and if I knew it, everybody knew it. So, but, I go with the price volume action. I don't rely on opinions. Yeah, I try to form sort of a macro view on things to sort of give me some context to operate with, thematically at least. But the bottom line is, I just watch what stocks do. It's like, what's one of my longs right now? And I'm up pretty nicely on it right now. It's a stock I was shorting a few days ago. Another one, a week ago, you guys heard me talk about shorting Mobileye here down near the 50-day a week ago. And I turned around and went long, okay? And some of my best swing trades on the long side start out as things that I'm shorting. So same thing goes for Tesla. And I'm not going to sit here and argue with it. I'm just going to go with the flow. The line of least resistance. When the stock tells you where the line of least resistance is, you just go with it. We didn't kiss. I got a big alert, and there's going to be, I already have these fireworks rigged up in my monitors here that are going to go off when it hits, Dr. K. That's the new eSignal 4D alert system. So anyways, and probably get some vodka spilling on me too, or champagne, stuff like that. Anyways, what do you think of Teva? What am I supposed to think? I think it's a stock that just keeps going lower, so I don't know what else to think. I wish I had shorted it at 70 and was still short it. That's about all I can say at this point. Let's see, ENG, I was wondering about that one. Okay, N Global. Well, come on, it's a $2 stock. Only morons buy $2 stocks, or brokers who call their clients to get it moving. I mean, come on, a $2 stock that trades 71,000 shares a day. What planet do you live on? Planet Piker, where you buy, what, 100 shares of a $2 stock? I'm not going to touch this thing with a 10-foot pole. But you know what? A broker calling his clients and getting everybody excited about this can get this thing jacked in a hurry. So I wouldn't mess with this kind of stuff. Would you, Dr. K?
It brings to mind what this colleague who retired at the age of 33 because he had like 12 years of great market performance. He's a great trader. And he said, I made money off what he would call a piker stock. And he said, that's the worst thing that could have happened to you, because now you're going to start thinking that you can make money that way in a more consistent basis. And so a stock like ENG, yeah, total piker stock. If you made money off this one, God help you, because don't think that this is the way to make money, consistent money in the market, because eventually stocks like this will take the money you made today back. It'll take it right back and then some. So to be avoided at all costs.
Yeah, Bill O'Neill would have slapped us silly for this one. So I mean, he used to give me a bad time. He used to slap me silly for talking about $15 stocks. So, anyways, continuing with. I did want to point out, I don't know if I made that point earlier, but this is a Livermore Century Mark rule buy using the 100 level as a tight selling guide. You give it another percent or two if you wanted to on the downside for porosity. QTNA is the thin stock of the day, or the week rather. We've been watching this for a while. Got real tight in here. You see a 5-day pocket pivot here, and then a real pocket pivot here as it's starting to come up. Not much else after that, but you can see this sort of just tightens up, and it gets real tight, and we put it on here, and now it's up another, I don't know, what is that, 20% or something? No.
Yeah.
Yeah, it is.
Yeah.
It's
So
close to that.
nicely.
See, but that's not one I could buy. Trades 214,000 shares a day. But see, if you're busy buying that $2, so you hit a bot, this one instead, it's a little more liquid. Trades 3 times as much volume. So, but it's still thin. But at least it's institutional price stock, so you know that institutions are probably interested in this. Anyway.
Yeah. If you're still sitting on a position in this, you know, you should. This is a great time to be selling this thing.
I would take it, yeah, and then look to buy on the pullback, maybe the top of the base. Square, let's go to Square. Now Square, this is classic. You're running up, you get the Bible gap up here, we put it on. Now it comes back to test that, but you also notice here's another situation where you get an undercut and rally. I'm always watching these when the market pulls back. So we ended the year with the market pulling back, and it didn't look so hot, to tell you the truth. The market looked kind of weak and flaccid, shall we say, going into the last 2 or 3 days of the year. And at the same time that I saw Square's undercutting some lows here, and then finally on Tuesday of this week it's able to get back above the 20-day moving average on a 5-day pocket pivot. The next day we get a full-on pocket pivot, and that's this day here, and the stock's now breaking out to new highs. So you had to get in here, and that was a spot. If you bought along, or once you saw the pocket pivot on Wednesday, then you are looking to buy at the 10-day pullback yesterday, and that, you know, you'd be up 10, well, about not 10%, but maybe 7-8%, which is not too bad, not too shabby. Let's see, I'm watching this STLD. I actually started nibbling at around 37.30, I think, on this pullback. Let's take a look at the 620 chart. I know, now I just got to find it. It's here somewhere, I can tell you that much. No, that's not it. There it is. I see it hiding underneath there. All right, what do we see here? What magical properties of this chart? We noticed that you did get a MACD stretch down here, and you crossed. So now as you've crossed, now you're crossing below again, but notice the line's starting to move up. You're undercutting the intraday low. So that's why it looks to me like this is where you might want to nibble on it. Now the trick here is that you could get as far down as a 10-day line, in which case I might go all in at that point. That's at 36.84, and it's really not that far away. It's 40 cents away. That's really kind of nothing, 1%. So you're within range, and this is where I would start to get interested, because you're seeing the turn in the MACD, number one, and it's making higher highs now, okay, and you've undercut the prior low on an intraday basis. So this is where it might turn. So I'll show you another good example of how the 620 chart, and learning to interpret it, can be helpful. Not that I'm perfect at this by any stretch of the imagination, but if you're looking at Tesla yesterday, and being long Tesla, this was of interest to me as well. But notice how you get this break early in the day on heavy volume. Now, given the fact that the stock ran up so much the prior day, which would be up, you guys can see this up here, it makes sense that you run into some institutions who will take some profits and sell the thing. So maybe we're not going to make this. We only have 10 minutes left in the webinar. So anyways, it makes sense for this to happen. What you're watching is as it's coming down, it's bump, 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 coming down. It undercuts the low here. So now you undercut here. At the same time, notice how you had the MACD stretch occur here, and it started to bottom and turn up. So that's a similar situation as what I'm seeing in STLD right now. And that is that you have the MACD lines moving higher highs, while you're undercutting a prior low in the pattern, and then that sets it back to the upside. It's slow, but it eventually gathers some momentum and moving higher today. What is it? It's only up $1. I think it's slowing down here, and I think at some point it's going to track sideways ahead of earnings, which I think are in the first week of February. But that's an example of how you can figure out what might be happening in terms of a turn in the stock. Notice that once you do come back above this low in here, the selling volume becomes very light in here. So that's constructive. So, you know, it's interpretive, and it's not something, there's no like rules that you follow or checklists. I know IBD has everybody brainwashed into believing that you can invest on the basis of checking off boxes on checklists, like, you know, is it wearing thermal underwear? Check. You know, does it have its coat on? Check. You know, all this other silly stuff. But in any case, so it may be getting time to take profits in this turkey. Let's see, where are we? Man, it doesn't want to get there, Dr. K.
It keeps teasing.
Does anybody have some sort of a dance they can do, like a rain dance version of for Dow 20,000? It's so close yet so far. I did hedge, however, in that I did have some martini glasses engraved with Dow 19,995. So we got there, so those will work. So, anyways. Oh, funny someone should mention Rick. I was talking to a friend about this earlier. Rick runs, this is an adult club concern, and it trades by appointment 95,000 shares a day, so it's thin as all get up. But this is one that my younger brother Rick, coincidence there, this is one that he's loved for a long time, mainly because he's a frequenter, shall we say a regular customer of adult clubs. So I think now that he just got over 50, that would qualify him as a dirty old man. But in any case, you ask me what I think of it. What am I supposed to think? It's just way the hell up there. It's a thin stock. Again, this is a stock that a broker could get his clients to buy and just send it shooting higher. And a friend of mine who told me he bought it down here, so he saw it before anybody else did. Now you're asking us about it when it's way up here. It's, you know. So that's a typical phenomenon that people are attracted to something when it shows strength rather than trying to anticipate when a move or rotation into the stock might occur. So which I prefer to do, and we use the bottom fishing pocket pivots, the roundabout pocket pivots, the undercut and rallies, and pocket pivots, just plain old pocket pivots to do that. So anyways, you asked what I thought about Rick, and that's it. So, but my brother loves that stock, and for all I know, he still owns it in his IRA, which he's owned it for. When did this thing come public? Maybe 10 years or something like that? Let me see.
Been 22 years now.
Yeah, so, yeah, he liked this in the 90s. I think it was the late 90s. Anyways, he may still own it. I don't know if he's making any money on it, but, you know, it's just stick and thread. But it's so thin. So I could go in and buy 10,000 shares and jam it to 20, so which I'm not going to do, obviously, but... And again, you know, this is low quality stuff. So, I mean, if you can figure out a way to catch it early, you know, and you can play it and you have a small enough account so that it doesn't really matter if you know, you don't have to have 50,000 shares like I would be looking to have, then I guess you can play it. But I'm not going to do anything with it now. DJI got within 37 cents of 20,000. Ha! I guess that counts, you know. What can you buy with 37 cents these days anyways? ALKS, Alkermes. Probably trying to rally. Yeah, they're all starting to do this. So all of these are percolating. All the biotechs are percolating. I say keep an eye on GW Pharmaceuticals. That looks kind of interesting. That's the weekly chart right there. And that looks pretty interesting in terms of the base. You can see it pulling in, holding along the 110 level, volume drying up. And... its cousin, Zynerba, which is another marijuana, actually you call it a cannabis derivative drug company, Zynerba Pharmaceuticals, which is a thin stock, has been moving higher. So I might theorize that on the cousin stock theory, this one is going to try and come out of this. It's a big pod too, and it could also be considered a big ugly pod with handle, so I guess it could fail, but it's basically filled this gap, holding along the 110 level. Maybe this thing goes higher. I'd keep an eye on it though. But you also want to keep an eye on some of these big stock biotechs and see if they start coming back. Like I said, showed Gilead and Biogen. Amgen had both had pocket pivots. Look at Amgen gaps up to the 200-day line. So they're trying to come back. So money is trying to rotate in this direction. So it might be an area to look at. So Siri, short thoughts. Short thoughts. Why would I short the $4 stock? I'm not touching this either way. So anyways, where do you guys come up with these ideas? Why would you a $4 stock? Why would you short this, for one thing? The pattern looks like it wants to go higher, and then I guess if you wanted to go long it, you could try and go long it here. But I sure as hell wouldn't be trying to short it. I don't even see the basis for shorting it. So short thoughts, I have none. How's that? Let's see. No, looking for that 19986. Here's an interesting one. Airgain. You know, this stock fascinates me because 1 minute, or rather say 1 day or one set of days back in November, they just couldn't buy enough of this thing. And they're just jamming it from like 12 bucks, under 12, all the way up to 30. So it's nearly a triple in just a few days. And then nobody wants it after that. It's just thrashed, and they keep hitting it and hitting it, and the sellers are just creaming this thing. They did a secondary, and I guess they got it completed, but now you get this bottom fishing pocket pivot here at the 10-day line. Maybe it's going to try and start turning. So very, very interesting. So still not getting a turn in this STLD. What will happen is I'll take a position here, and as soon as it comes down 20 cents below my buy point or something, I'll bail out, and then it will turn. So take a look at this. A little bit of a pickup in volume here, so maybe they're exhausting the sellers. I would think, though, what I'm looking for here is with the Dow needing to get above 20,000, would X move, and if that does, if it starts to move back to the upside, you can see this is starting to maybe try to turn here. So keep an eye on both of these together, and AKS as well. They're all cousins. They might try and drive the Dow higher using X, and you know, Apple's a big component. Notice Facebook also. Let's get over here. Facebook is trying to post a bottom fishing pocket pivot, boom, coming up to the 50-day, just like that. And this is like Amazon in the sense that it was looking like a head and shoulders type top. You see there's the left shoulder and the big head with the big volume along the right side of the head, and then it's setting up on what looks like a couple of shoulders, but nope, it's going to turn around and go higher. That just tells you money wants to get into this market in a big way. So, and it's buying whatever it sees fit to buy, and you know, all of these big stock NASDAQ names have been jamming because they were leading the market yesterday. The Dow and the S&P were down, but then the NDX, the NASDAQ 100, was up, and you're seeing Google posting it looks like a cup with handle breakout. We'll see how the volume ends up, but it could qualify as a pocket pivot by the end of the day. We still got 3 hours to go. You see Microsoft on the comeback trail as well, pulled into the 20-day line, dipped below it. Now it's trying to turn higher. Price line was looking pretty grim last week, you know, as it breaks to the lower lows. But here, notice here, what do you see? You guys see anything here that we've been talking about? A theme? I'm sure you do. You undercut this low. So what are you doing now? Now you're making a double bottom, and now you get the undercut and rally back up through, and this thing posts a pocket pivot, I believe, yesterday, coming up through the 50-day line here, and we're off and running. Just like that. Let's see. Starbucks. That's another big stock NASDAQ thing. That's trying to come back a little bit. Sort of looks like that. It's gone nowhere forever. Are they doing anything exciting, Dr. K? No.
Not particularly.
No. Netflix keeps going higher. I believe it's making an all-time high now, is it not? That would be an all-time high, correct? High 133.27. It's, well, it'd be an all-time closing high.
Yeah.
I bet you it happens. I bet you it happens. We'll see what happens here. Anyways, let's see. We're back to 19,994. My alert is going to go off when this hits, so 37 cents away earlier. Let's see. iRobot's hanging in there pretty tight. That's kind of interesting. It's way up there though, but it's interesting that it's been coming back like this. So the big pattern, yeah, that's kind of interesting. Interestingly, my wife just bought one of their robotic vacuums. It's been running around the house lately. Kind of cute. So I was trying to figure out how to use it to bring me martinis, but it kind of wobbles a little bit, and the martinis don't really stay put. So that failed. Broke a couple of martini glasses. But anyways, but yeah, that looks interesting. So wait, it's a high tide flag, everybody. Oh, buy it. Just buy it on that basis. I would say, you know, you're getting some volume. See the selling volume coming in here along this base? So it's probably going to need some time to settle down. Now, if you had some sort of undercut of this low that meets up with the 50-day, that would probably be your best entry opportunity. So 5 points away. They got to do this. I mean, come on. Either that or we're going to have this massive reversal and the whole market's going to blow to pieces. So, all right, let's continue with the, before we have to wrap this up. We got another minute or two. Let's see, SXC, this one has been disappointing. The calls have been disappointing. But for all we know, it's just building a base. It had a big move. It could be building a base. And if you look at the weekly chart, the volume's been drying up for the last 3 weeks, and it's kind of just settling in. You look at some of the other calls like Arch Coal, this thing's just breaking apart, but all it's doing is, you know, flying around within this very loose IPO type, post-IPO regurgitation pattern, because Arch Coal actually was reorganized and reissued, I guess, is what happened. I don't know the particulars on it, but so it's a rehashed. Trade desk maybe is viable at the 50-day. This one you want to buy on weakness. You don't buy on strength. And again, here's a breakout up here a couple weeks ago, and it doesn't work. And again, shows why you don't want to buy breakouts. Be opportunistic. And I think you had a pocket pivot. Well, it didn't really hold 3 days ago. You had enough volume, though. But it's just hanging along the 50-day. Maybe it turns. But that's stayed on our list. And, of course, X, the last name, on our list that we've added recently. So, and it's just hanging in there. So let's take a look at STLD. This is kind of my working list of names I keep every day. So stuff I move to the top is stuff I'm either long or I'm interested in or started a position in or whatever. These are all, the ones in the top here, these are stocks I have 5% positions in. I own 5% of the company. Yeah, right. I can't believe people actually will believe me when I say something like that. Those are my focus list on the day. Some of them I might be long. I do like the VEEV, I am long that, and the PE, I'm long that, and the ANET. So Tesla, I thought was a sell into the 230 level, but we'll see how this, they always go higher, so we'll see how that plays out. GKO, so you could actually see this one trying to set up along the 50-day line, but it's, you know, it's volatile, and that's tough to anticipate. You know, the Rio, I like this, but it's kind of blah, so I'd rather go with the X or the STLD. The air gain looks interesting, you know, and the pocket pivot coming up through the 10-day line. So anyways, PI is witchy. Yeah, you know, this stock I don't like. It has these strong moves. If you're going to buy it, you got to buy it when it just doesn't look right. So I guess off the 50-day line, check and see. See, yesterday it did not undercut this prior low in here. See that? So I don't think it undercut this low. So what you might want to see is something undercut, it hits the 50-day and turns around and goes. Maybe. Or it just fails altogether. So anyways. So, you know, I think there's a lot of interesting stuff out there. We're looking at, let's throw another couple. I was looking at this one a week or so ago. And it's very interesting that it actually turned out as this box. Anybody know about, oops, I don't know how I got there. And mainly because you have a stock, it's run up and you get a double bottom base, and so you're trying to undercut, you barely undercut the low here, and it becomes an undercut and rally at that point, and look at how it's been popping. So you're getting a pocket pivot yesterday at the 20-day line, and another one that's a gap up move at the 50-day line. And this is another cloud name. So this is another reason why I think the clouds look pretty good. So I like the VEEV, I like the CRM. I don't know about now, that might, it looks like it's trying to come back. But you just look at the whole group and see what looks interesting there. I think also you can look at materials names, you know, the MLM, this thing's chopping around, but to see if it does an undercut and bounce off the 50-day line. The other overriding issue right now, and you might notice that the stocks on my focus list, except for, say, Tesla here, well, no, that one too, they're not going to announce earnings for a little while yet, so I want some stocks that maybe have some time before earnings come out. And if you have stocks like, you know, the X and the STLD, they've got a couple of weeks yet, but still as you approach that date, it becomes problematic unless you have a big profit cushion in the stock. Okay, so anyways, so I like looking at names that are, say, not going to be, if we go, let's look at, let me, gotta remove my filter. Let's look at our focus list. And I don't know if you can see it, you probably can't, but I got the earnings date here, so we can sort it by earnings due date. So the next one, Netflix on the 18th, Steel Dynamics, FCX, on the 23rd and 24th. Do we have X on our... X is one of the names we have on... Yeah, here it is. X is actually showing the 31st now. So, okay. Amazon is on the 26th. So you can see real quickly where these things are in terms of how long and before their earnings report date. So we're at 19,980. We're not going to get there because we're going to have to wrap this up now. But anyways, you guys see there's a number of ideas out there that are working. I think you being able to use pocket pivots within the base, particularly the roundabout and bottom fishing type pocket pivots, are probably your best way to gain an edge in this market. When you combine that with undercut and rally type moves, so you kind of put them together to to get the moves, and then you can decide what to do in terms of holding a certain amount of the position. Like with Momo, that one I could sort of smell this one on the Wyckoff and retest. You broke to the 200-day line, and then you came back to test the 200-day line, and volume is very light 4 days ago. So I actually bought it 4 days ago in the low 18s, and then I got this move up above 20, and that's a 10% move in just a couple of days. So I'll sell into that because I can also see that you got some overhead here, but I want to see how it handles that. Now if it's holding above this low, now I might want to come back into the stock based on an undercut and rally type move below these lows. So that's how I'll handle some of these, and I'll trade them. So anyways, I notice the ANET is starting to get moving here. A little bit of a punch here. Let's see. Whoops. Yeah, see how it's turning off the lows. You can see here also you got a MACD stretch here at the lows. That's actually where it started to come in, and you crossed, and now you bouncing around, the line's moving higher, higher. Finally, now you're starting to see a 620 buy signal. So that looks to me like it might want to turn. Anyways, someone's asking about the plans for the VoSI dinner. Yeah, I mean, the truth is they haven't really had time to figure out how we're going to do it. I still have to call a restaurant or two and figure out how it can be done. If it's too much trouble, though, I got to tell you, I'm a trader first, and everything else is second or third. So, if it's going to start taking up too much of my time to organize something like this, I'm not really going to do it. But if it's simple to do, and the restaurant's cooperative, and we can find the right place to do it, then I think we'll do it. Right, Dr. K?
Yeah, so that sounds about right.
Okay. So, anyways. So we'll send out details as soon as we know anything. So, but I do need to get in touch with some of these restaurants. Anyways, we'll see what happens. So, all right, we're not going to hit Dow 20,000 during today's webinar, but like they say, a watch pot never boils, and if we're ever watching it, we are right now. There it is, and we'll just see what happens as the day progresses. But I'm betting. Well, I'm not really betting. I'm going to say, well, let's bet, Dr. K. I'll bet you $1. That hit it today. Okay. Do you want to take the other side of that bet?
I'll take the other side of that bet.
Okay, just for the sake of argument. Okay, so we'll see what happens. All right, you guys, thanks for showing up. Hope this was helpful. I think the long side remains the side to be on for now until further evidence presents itself, and you can see a lot of setups showing up left and right, and that's usually telling you that things are percolating pretty nicely under the surface. Well, and even on the surface with the Dow pushing 20,000 and the S&P pushing new highs along with the NASDAQ. So looking good. Thanks for showing up. You guys, will catch you next week. Have a great weekend. Ciao.
So long, everyone.